Hi everyone, this is a technical analysis on gold. Let's start with a fundamental overview first. Gold has been on a steady rise since bouncing on a major trend line and the market increasing the easing bets for the Fed. The momentum waned a bit though, as market participants await the NFP release before the US holiday tomorrow. In the bigger picture, gold remains in an uptrend as real yields will likely continue to fall amid the Fed easing, and just a hawkish repricing rate cuts expectations could trigger corrections in the short term. The economic data will be particularly important for the market, as Fed members sound inclined to cut earlier than expected or even more if the inflation data remains soft or the labor market data deteriorates further. But if the data starts to come out on the hotter side, then a hawkish repricing should weigh on the market. Now, on the daily chart, we can see that gold continues to edge higher after the strong bounce on this major upward trend line, where the buyers stepped in to position for a rally into a new all-time high. The sellers might want to wait for the price to come into this resistance at 3,438 level or break below this major trend line before positioning for new lows with better setups. In the 4-hour chart, we can see that the price broke above this minor downward trend line that was defining the bearish momentum. The buyers piled in on the break, but the momentum waned as traders await NFP release. From a risk management perspective, the buyers will have a better risk to reward setup around this most recent swing low at 3,327 to position for a rally into new highs. The sellers, on the other hand, will look for a break lower to start targeting this major upward trend line and eventually a breakout. On the 1 hour chart, we can see that we have a bit of consolidation now trading into the NFP report. The volatility is generally high and spikes are very common, so the technical levels might not be respected at all. Nonetheless, with soft data, we can expect the buyers to pile in more aggressively, as traders would increase their rate cuts bets, while a hot report could take us back to this major trend line as the market pares back the easing expectations. These red lines define the average daily range for today. For the upcoming catalysts, today we conclude with the US NFP report, the US jobless claims figures, and the US ISM services PMI before the US holiday tomorrow.